First thing you need to realize about affordability, it's better today than it was on January 1st. Affordability in 2025 has never been better. This is the best it's been all year. It's mathematical certainty that affordability is getting incrementally better. 2025 was the third hard year. For some of you, 2026 will be your best financial year ever. If you had a bad 2025, don't rest on your laurels. This is not the time to say, I deserve a vacation or I deserve a new car. No, you don't. 2025 sucked. Get off your ass, work your ass off, build a solid pipeline, and crush Q1.
All right, ladies and gentlemen, I've got Mr. Michael Zuber from One Rental at a Time, and I'm going to be asking the questions today as a mortgage broker who just gets peppered on a daily basis. Where are rates? What are rates doing? Are they going up or down? What about a 50-year mortgage? Portable mortgage, how's that going to affect things? I'm tired of answering these questions, Mike. I want you to answer them. So today we're going to flip it a little bit. I'm going to be one asking the questions, and because I was just having a conversation around it, I think we'll start with portable mortgages. Because, you know, for people that don't know, maybe you give them a brief little 15-second on what a portable mortgage is, but can it work? Would it work? Would it ever really be a thing in the US? What are your thoughts on portable mortgages?
So portable mortgages, first kind of a 10,000 foot view. Basically, you have a mortgage on your house today that you like. Let's just say it's 3%. And let's say the balance is 300 grand and you want to buy a new house, but today's mortgage rates are 8%. Again, I'm just making these up. A portable mortgage would allow you, in theory, to take the existing mortgage to the new house, right? Because the mortgage is in your name, and the banks, in theory, would just change the collateral, which would be address A with address B. Simply said, that's a portable mortgage. Portable mortgages are interesting in theory. It was actually something I put out there as a possible solution to the broken housing market 3 or 4 years ago. Because again, why is the housing market broken today? Well, we have a lot of people that are, fortunately have 2s and 3s, and some people have 1%, 1.9% mortgage rates, and they're stuck, right? They can't even, there's some people today that have mortgages that if they had to buy the same house at today's price and today's rates, they wouldn't be approved, right? That's how vastly different mortgage rates are. So a couple of things. It's one of those interesting, theoretical conversations because it could unlock a lot of things. I think when you think about portable mortgages in practice, like in reality, like in the real world, it's not going to come to the US, in my opinion. First, when would they be helpful? They'd be helpful on existing mortgages, right? The people that have 1s, 2s, and 3s. It's very, very unlikely that you're going to be able to take those mortgages going forward. Why? Because those mortgages weren't written as portable. They weren't underwritten with interest rate risk. They weren't underwritten to be portable. They were priced because people stay in their homes 8 years, right? That was when they were written, that was the average. Today's 12 years. So in theory, unlocking the housing market with a portable mortgage won't work because the problem is mortgages that were written in 21 and 22. And those were not written under the guise of being portable. So it's very unlikely they're going to be quote unquote backdated. Could a new mortgage be written as portable? Absolutely. It could be, because it would be priced for that portability. It would be priced for a longer life in theory, right? This is just how the mortgage game works. And then you get down to just the people that I know in the mortgage world and on Wall Street. I've asked a lot of people since portable, since they've talked about this, and they all laugh and chuckle. It's like, it's not coming here.
Right.
So
yeah.
Yeah.
Get a mortgage broker to agree that you write one loan and then the person just transfers it, and it's just a servicing transfer thing from then on. That doesn't sound great. And I like you said, they weren't set up like this from the beginning.
Right.
Yeah. The investor who holds that mortgage bond isn't going to be like, oh yeah, this asset, that asset. They
want these mortgages to go
single
away.
Family.
No, it's not happening.
All kinds of, okay. So that one's not happening. We can forget that dream. Mm-hmm. What about the 50-year? I don't know if me and you have talked since, the last couple of weeks since this is.
No, we had tech issues last week. We didn't really. So I've thought a lot about the 50-year. I think so. The only way, let me be very clear. The only way I think the 50-year works, and it's a very narrow corner case, is if you restrict it to owner-occupant purchases ideally first-time home buyers, probably below some price point. Because what we want to do is we want to help the people that we want to help. If we just unleash the 50-year mortgage to everyone, homeowners, investors, all price points, what you're going to see is prices will reset and values will go up. So it'll be a lot like rent control, where it will feel good for a moment, 12 months, 18 months. And then all we've done is we've made housing more expensive. And I don't think that's what we want to do. I am, to be very clear, not a proponent of the 50-year mortgage. I think it's not the right thing. However, for investors, as all my investor friends have told me, they would love a 50-year because they don't really care about mortgage pay down. They want the cash flow. So I get it for investors. As somebody who lives again in the real world, I think it would be damaging to families and homeowners long term. And I'm not really, I'm not keen on 50-year mortgages, and I'm not keen on 15-year car loans. I think we got to stop stretching out the payments and,
right.
Live below our means.
Yeah. At least the argument on the mortgages when I talk to people is that it's an appreciating asset versus, buying $100,000 Range Rover and, owing 85,000 after 5 years into a 15-year and it's worth 45. That would be good. Ugly. And the 50-year, I want to just let people know kind of my stance, because I talked about it in front of a group of realtors yesterday. It's a similar stance I have with a lot of things in mortgage, and I compare it to down payment assistance. I am strongly against down payment assistance for 97% of people. For 3% of people where this is going to allow them to get on the property ladder, this is a way for them. And without it, it would be another 5, 7, 10 years to save a down payment. Right. They've got a plan. They've got great income. They've got good credit. They're responsible. They're going to step onto the property ladder. They're going to find a way to improve and refinance out of that down payment assistance, FHA or whatever it is. For those people, which again, might be 3 out of 100 or 2 out of 100, it's a good idea. For 97 people, I wouldn't recommend it to them. Higher rates, I think that's higher fees. And so the 50 is the same. And to your point, if you did it, I would really hope you had smart people in the room that can say, listen, if we're going to charge 6.5% for the 50 and 6% for the 30, that's going to defeat some of the purpose. So why don't we do some loan level price adjustments? And for first-time home buyers, for owner-occ only, maybe sub 100% AMI, make it to where that rate on the 50 is the same. Yes. Now we're talking about a $300 difference. Now it's, in a way, kind of like those, if this is the only way to get on the property ladder, let's do it for this segment of the population.
I could get behind that.
Okay. Yeah. All right. Well, if anyone's listening, if you guys do propose a 50-year, Mike and I,
come on, Bill Bolte.
We'll be on the panel, Bill. We'll be
absolutely.
on an advisory council. We'll be on a panel. You fly us to somewhere nice.
Yeah, I'll even buy my own ticket. Let's go.
Okay. Yeah. We just want to help. So give us a call. All right. So we got those two out of the way. Just generally speaking, I'd love to hear your thoughts on the current state of the housing market. And for people that might say affordability is an issue, if we're not doing the portable mortgage, if we're not doing the 50-year, what the heck can we do? I also spoke about this yesterday at a real estate meetup where I think we're looking at the wrong things. We're looking for a silver bullet or a magic fix. You may or may not agree that one doesn't exist, but what are your thoughts as a whole?
Well, I think there's a couple of things. Sometimes we have to zoom out. So the first thing you need to realize about affordability, as shocking as it is, it's better today than it was on January 1st. Affordability in 2025 has never been better. This is the best it's been all year. Why? Well, rates are down about 0.75 of a point. Prices are basically flat. And wages are up 4%. And it's mathematical certainty that affordability is getting incrementally better. It's not as fast as anyone wants, but still, it's incrementally getting better. It's not getting worse. And my long answer on affordability is this is what I told you was coming. And unfortunately, we have probably 3 more years, maybe 4, of just incrementally better and better. I think wages will go up the next 3 to 4 years, higher than inflation. So real wage growth, not nominal, real. I think rates, generally speaking, certainly with the transition to a new Fed president, will be lower than today. I think prices are not going anywhere. I think the median home price is stuck where it is for the next several years. So, affordability will look a lot better in 2028, 2029. It just gets slowly, incrementally. Nobody likes it. It's not fun. It doesn't feel great. But if you're on the margins, better is better, right? Just better is better. And the last thing I'll say about this is I made a call early in the year that I thought August of 2025 will be the transaction bottom. And boy, does that call look amazing right now. That call looks freaking fantastic.
Nailed it.
I think I nailed it. And, NAR came out today saying that they think home sales or transactions will be up 15% next year.
Wow.
I'll take the under, but I do think they'll be up. I think they'll be up 7, 8%, maybe 10. But again, up is up. And the last thing I would tell you, if you're in the mortgage business or you're a real estate agent, I want you to hear this. 2025 was the third hard year. And it was probably the hardest year for most of you. But I want you to have some comfort in knowing years ahead, including 2026, will get better. And for some of you, I want you to really hear this. For some of you, 2026 will be your best financial year ever. Now, that's saying something. Why could I say that? Because again, I think transactions in real estate are up 10%. I think transactions in mortgage are probably up 25% because you also have refis.
Yep.
And you have 60% less competition. Think about this. The pie grows 25%, but there's 60% less people eating the pie. You're going to have a wonderful year. The last thing I would tell you is if you had a bad 2025 is don't rest on your laurels. This is not the time to say I deserve a vacation or I deserve a new car. No, you don't. 2025 sucked. Get off your ass, work your ass off, build a solid pipeline, and crush Q1. No, there's nobody who had a bad 2025 that deserves anything at the end of the year. Keep working. Don't take your foot off the gas. Again, the pie is growing. Go get your share and then some. That's what I would tell people.
Agreed. And for a lot of individual loan officers and mortgage companies, October was the best month in years.
There you go.
I think I personally had my biggest funding month by volume since late 21 or early 22 in October of 2025.
Yes.
So we are back, baby. One thing I wanted to point out, just because as you were talking about it, and I talked about yesterday, like the big picture of real estate.
Mm-hmm.
As I was talking yesterday, Mike, I realized how passionate I am and how much I believe that owning and holding on to real estate is quite possibly the greatest thing for most Americans, right? Like you talk about, it can change your life to own 4 properties. And so that far outweighs any short-term thinking where someone's like, I want property values to go up by 8 or 10%. To your point, and I agree wholeheartedly, some wage growth, some flat prices in housing, and a trickle down of mortgages are going to be this slow burn back to an affordability level that feels more comfortable. I just looked at it because I was looking up Sacramento numbers specific for something I was talking about yesterday. And if you look at, like, I know my parents bought a house in 1981 and the rates were in the teens, right? And so if you look at home price appreciation in Sacramento specific in 83, 84, 85, 86, it's 1.4%, negative 0.9, 4%, 4.1%. Now, as somebody who is thinking more short-sighted, you're like, I want 8% home price appreciation, and California averages 6 to 7. But in a time where, I want the health of the housing market back more than I want anything else, that's what does it. Slow home
Just
price appreciation. Where's another? Oh yeah. Then like the early 90s, 92, 93, 94, 95, 96, 97, 98. That was flat. There was like a -1% and -2.8 and some 1.8s and 5.2. But you know,
Flat.
if you bought a house in 92, in 98, it might have only been worth a few percent more.
Exactly. And that's what's coming.
Right. Yeah. I agree with that wholeheartedly. And I love it. You know, as somebody who owns real estate and, you know, can look on an Excel spreadsheet and watch my quote unquote net worth grow in markets like 20 and 21, give me flat home price appreciation, give me wage growth, give me, you know, a slow.
This is a long-term game. And again, I mean, if we had another 8 to 12% run in property values, which I am by no means calling, there's a very good chance I would sell everything. I've been here before. I have a track record. Oh, by the way, remember in 2006 when I sold everything? I would do it again. Believe me. And I own a lot more than I did in 06. I do not want to be put in a position where I sell everything because there's just another stupid bubble forming. We need flat for years.
Okay. Final question. This one's just a fun one. In the scenario where things go up 10%, you've got a lot of real estate to sell. And I don't know your personal financials and whatnot, but let's say you were forced to have to 1031 because there was going to be a tax bill or something.
Sure.
What would you look to buy?
It would probably be what I did last time. I would certainly start by looking for multifamily. I would probably this time look to trade up in quality. Probably a B instead of C. I own a lot of C apartments today. I'd probably go to B. Again, for me in my position, it's more about peace of mind than, you know, maximum cash flow, which is what I bought for years. Now it's like, okay, I got enough. Let's lower the stress level. So I would probably trade up in quality. So I'd probably go B. But you know, I have people, you know, I invested in a syndication in a hotel. So I might, you know, go to a hotel. I would find a way to put the money, but it would certainly be residential, not a big office fan, for example. I might do a triple net, you know, Starbucks building or something like that for some of the money, because it would be a very large tax bill. But that's where my mind goes first.
Yeah. Higher quality, less stress.
Yes.
You don't need double digit.
I don't need to maximize. Yeah, exactly.
Yeah. You got a big enough chunk to just sleep easy at night and do something. All right, cool. Thanks, Mike. I appreciate your time today, brother.
All right. Take care of yourself. Where can they find you?
Go to mtmg.com. You know, there you can chat with our chat feature. You can book a call. You can find information. So I'm just letting people know now. You can still go to greatmortgagebroker.com and fill out a form, but make it easier on yourself. Just go to mtmg.com and schedule a call. Put something in the notes, please, so we know how to best assist you. I jump on a lot of calls where it's like, man, if I would have known that this is what the person was looking for, I would have prepared different, connected you with somebody different, done something different. So mtmg.com, book a call. Let us know what you're looking to do.
Thank you, buddy. Take care.